Hello everyone and welcome to this morning's session. Just before we start, could I just ask a favour? I'm pretty certain you can all hear me, otherwise this would be a very stupid question. Could you just type in that the audio that's coming through is reasonably clear and you can hear me? Is someone good here? Oh, thank you, Ed. Thank you. Very clear. Fantastic. Thank you. We were playing around with our headsets and some of the settings have been changed slightly. Fine. Thank you so much. Really, really appreciate it. So welcome to today's webinar. Before we start, as usual, may I just draw your attention to the disclaimer, which I know is coming up on your screen at the moment. And just to remind you, as if you needed reminding, this can be a very risky business. So please don't ever think of using money that you cannot afford to lose. So let's take that down. We all know that about that. This is being recorded, so if you have to leave for some reason and you want to catch up on what we say, it will be up on the YouTube channels, my own YouTube channel and the Quantum Trading YouTube channel as well. I'll just move that out of there, lovely. And as always, David is here with me. I'm a bit at sixes and sevens this morning because I got back quite late. Well, late for me, because yesterday evening, I think I might have mentioned this at a previous webinar. I was basically back in the City of London. We don't live very close to the City of London anymore. We were practically on its doorstep until very recently. We've moved out into the sticks. And I was here yesterday at this wonderful establishment. It's called the Counting House. It's in Cornhill, just up from the Bank of England. I was there at a little event that I've been invited to by someone that I know on Twitter. He's a specialist in risk analysis and management. I was in very, very exalted company. There were economists, there were some traders who trade other people's money, independent traders. It was a small gathering, but so much information, so much we shared, and really the take home that I took from it is several reminders actually. First of all, it doesn't matter whether you're trading with a small amount of money or you're handling other people's money. The stresses and strains, what you have to learn, what you have to deal with are exactly the same. It's just a matter of scale. The other thing was a timely reminder, and this was someone that I was talking to who'd been in this business since 1973, when he worked for one of the banks, one of the German banks at the time, when in the days when before the euro, and there were French francs, German Deutschmarks, etc., currencies that obviously no longer in circulation. And it was a timely reminder that he now trades himself and other people, is that the forex market is there. It's there to facilitate trade, and that sometimes we forget this, that it is actually a place where currency have to be exchanged for mergers, acquisitions, etc. And the pair that he was particularly interested in was the pound yen. There was some huge merger that went through, that needed to go through a little while ago, and there was humongous amounts of money that needed to be, as I said, exchanged, and that is going to drive the price, the exchange rate. And when a bank has to go into the marketplace and and make these purchases, it is going to have a huge effect, which is why it's like buying or selling huge blocks of stocks and shares. They can't just go in one go. It has to be done in different in little bits and pieces, and that's what you'll see on things like the order boards, and you'll see the money flow coming in. So that was a nice reminder of that. And I suppose ultimately what I also took away is that we never really stop learning. These guys, this business, you cannot afford to stop learning, because the market changes. I mean, these days it seems to change on a minute by minute, or certainly by session basis. And there's always something new coming along. Technology changes, sentiment changes, everything. And that's why it makes it so fascinating. So no matter how old you are, once this market has got you in its grip, it never lets you go. It just is this endless fascination. So I just wanted to share that with you. There's all sorts of other things that I came across, and I'll be putting it up on my blog and my Facebook page, and as I said, and links to some of the resources that I came across, because I contributed things that I knew, that I was a bit sort of taken aback that some of the things I had come across they weren't aware of, and they were in the inside, as it were. So it was a great sharing opportunity, and I also got to meet someone that that I wanted to catch up with sometime, is a guy who used to be at Forex Live, Mike Patterson, and we had a really lovely evening there. So there we are. I'm going to pass over to David. He's got some things to say as well. We're going to be looking at some reversals. We're going to be looking, obviously, at volume price analysis, at the quantum trading tools as well. He's got some trades that he's been looking at. I'm just going to revisit my little basket that I had on, which I actually closed out on Friday, because I'll explain a little bit why I put it on in the first place, why I closed out, and what I'm actually going to be looking to do now. This was a 5 positions that I actually held for about 8-9 days, something like that. Anyway, let me pass over to David for a minute.
Thanks, darling, and a very warm welcome to you all. Anna's made a face at me, so I blasted her eardrum, so I hope I'm not blasting yours. I will lower my voice a little bit. A very warm welcome to you all. If I know we've got a lot of people who come along regularly, so warm welcome to you, and also a very warm welcome to all those new people that I can see in the chat box as well. So great to have you along today. If this is your first visit, we run as a two-hander. Primarily, Anna's on MT5, which is a great platform if you've not trialed it. If you're on MT4 and you've not stepped up to MT5, it's well worth doing. It's very much same look and feel, but you get all the advantages of MT5 with a multi-asset platform, and also access to a much wider range of timeframes, which can be a little bit restrictive on MT4. I've got the NinjaTrader platform running. I'm on NinjaTrader 8. With all the quantum forex tools and indicators running there. If you have any questions, happy to answer them. If they're short questions, we'll answer them in the chat box. If they're longer questions, we'll answer them on air for you. So I'm just going to pass back to Anna. I'm keeping an eye on things. I'm looking at some reversals that are going on the CSI, potential reversals, and just wanted to talk about that, and also really just change in sentiment, which I know Anna wants to touch on as well. So I'll pass back to her, and we'll get going.
Okay, very, very quickly, if this is the first time you're with us today, the volume price analysis, in case you haven't come across it before, it's really it's the methodology. It's a way of looking at the price action on your chart. It's something David and I have been using for many, many years. It's what we started with, and you can learn about the methodology from my books up on Amazon. This is from the .com page. This is all the books, but the ones that are particular to the forex market. There's just the first book was Forex for Beginners, which covers VPA and things you have to know about the forex market. Then what also I've done is actually put together about 100, just over 100 examples of the methodology across the different time frames, across the different pairs, to explain how you can, how to identify, what do we mean by VPA? What is the relationship between price action and volume? But that is just one side of forex trading. That's just one element, because the price action is in the context of what is going on in terms of the fundamental news, as I said earlier, what's going on in the M&A mergers and acquisitions side of the markets, and you've got what happens in related markets, and increasingly in the political elements as well. And what we've done now, we've put it together in what we call the complete forex trading library. It's not the hardbacks, it's just the ebooks, but it's all together, and it really does. So you can use that to start to give you an introduction, really to give you the kind of the education that you we believe, David and I believe, you need to begin your journey to becoming a forex trader. So that's what I wanted to say. It's easier just to see it up on Amazon and the other books there as well. Right, very, very quickly, if I just bring my my charts up here, just move that out of the way. That's the CSI. David was saying we were looking at the reversals, and in fact, one of the things, if you wanted to, you know, lots of people say, well, what is VPA? How do you use it and what have you? Well, it is looking at the relationship between price action and volume, looking for anomalies and looking for validation that the price action you see on the chart is actually genuine. And that can only be, in our opinion, be validated by the activity. Is it being supported? And if it's not, it's an anomaly. And what you could almost say is when you get once you start recognizing the anomalies in VPA, one of the ways you can use them is they come up at critical key points of reversal. So if you like, your anomalies, you could say, well, are they potential turning points, therefore potential entries and even exit points? Because if VPA is good enough to get you in, it's good enough to get you out. And then as the price move develops, what you then want to see, you want to see that move being supported by volume, that it's genuine, and that move not only in an up move but also in a down move, because you know whether prices go up or down, it has to be supported, as I said, with genuine activity and not be a trap move. And what we're seeing at the moment is actually on the Aussie yen. Now the Aussie yen is actually one of the pairs that was in my my little group of pairs that I put I had this basket, what I call this basket of trades on, and the bias in the whole basket. I wasn't hedged. I was very, very careful in positioning myself, so that I wasn't, as I said, wasn't hedging myself in the basket. Basically, I took the view, as I said, not last week, that my view was that sentiment was very positive in the sense that it was markets were risk on. They were happy to take on more risks. They'd be moving into riskier assets such as equities and commodities. But one of the reasons I closed out on Friday, other than that there was a nice profit in all the trades, was that we had there was going to be some very important Chinese data coming up on yesterday, on Monday, plus the fact, the markets had a nice run up on good news, on positive sentiment. With this Chinese data coming up, the chances were that the markets were going to, if not pause, they were likely to reverse. And in fact, this is the daily chart of the Aussie yen. Just let me take the Camarilla off, and then you can see the levels a little bit more. Delete that. There we are. Right. So this is where I came out. This is this was Friday. I came out here. In fact, we can see here it's got the little shooting star. Prior to that, we'd had a sort of kind of consolidation. The Aussie yen position was really, in some ways, it was a bit of a grind following the sort of flash crash where the price sort of dramatically came back higher. We can see this huge hammer candle, lots of volume underneath it. Well, that is in itself a massive signal that, at the very least, the price is going to stop falling. If that was going to carry on down, that would have been a massive down bar. So we saw that move higher. I captured some of that. And then after that, it was kind of a drifter. You can see here up a bit more, then a sort of minor pullback, up a bit more. Then what was not concerning, but you have very compressed candles with reasonable volume underneath it, and that kind of tells you, well, is the price struggling? Then we had, this was Thursday, a nice day. It went up, but it was a kind of doji, wicks to the top and the bottom, reasonable amount of volume in it. Then Friday, as I said, coming up to the news at the weekend, with this kind of candle towards the end of the session, I said, do you know what, that's it, let's wait and see. I can always go back in. This is the thing, because of my the time that I stay in trades, I have this option. I say, yeah, or I could take some of the positions off. I just decided, because it was, the whole basket was skewed towards sentiment, and I really was of the opinion that as I said, at the very least, sentiment would either pause, it would, the positive sentiment would pause. That was yesterday's candle, and it did. And in fact, today we've had this, it's sort of soured even a little bit more. And the excuses, the reasons you'll read in the press is of Brexit and more concerns about China, etc., etc. Whether that carries on today, I will just have to wait and see. And on this particular, what I'll be looking at again here is our heat map. And in fact, the positions that I took in the 5 pairs, they've practically gone back to their original starting points. The Aussie yen still down at the bottom. The CAD yen's done a little bit better. I was in the CAD yen as well. I was short the Euro Aussie. That elicited a really nice trade, but that's actually gone all the way back. It came down to about spot 17.18. And the Euro CAD I was in as well. Well, where's that gone? That's there. That's kind of gone back a bit. And I was also in the dollar CAD, and that was a very nice move, but that's gone back again. And it's this oscillation, these moves between these signs, as we say, like waves. And what we try and identify, we want to identify these potential turning points with VPA, with the help of our quantum trading tools and software. I know we've got lots of users in the room that we want to capture. How long we're going to stay, in these positions, that's down to you. As I said, my way of trading at the moment is not intraday. I don't have the time to actually sit in front of my screen. I wish I did. My life's changed slightly, but in a few months' time, things are going to change again, and I will be back at the screen on a more, on an hour-by-hour basis, and I'll be using the Renko and the other tools. But the principles are the same. We have to try and identify those potential reversals, those potential entries that were going to give us some kind of trade that we can take an advantage of. And looking at the Aussie yen, looking at the perspective of my longer term, fine, okay, that could be, going lower, but this little wick to the bottom of the Aussie yen that we see at the moment, this is what we're seeing, and this is the potential that we're seeing up on the Renko. Here we are. This is the move, nice move lower. Okay, you've missed that. Let's see if that's going to come as a reversal. I'm not sure if David's looking. Are you looking at the Aussie yen, or are you looking at another one, darling?
I've got others up as well.
I'm going to move over to David because he's been following as I said, looking at the reversals and taking a reversal in a faster time frame, even when the overall the pair is actually in a bearish in a bullish move. In a bearish move, and you're looking to go, with trading counter trend in some time frame or another. So I shall pass over to you. Is that okay?
Thanks, darling. And you should be seeing my screen any moment now. Just getting the thumbs up from Anna. Yep. Yep, fine. I'll just turn my volume down a little bit because apparently I'm too loud. Let me just turn that. Is that any better? Is that any better? Can't, yeah? Yeah, it's better. Yeah, okay. Sorry about that. I just wanted to talk about reversals for a moment. I've got this is running on a different time frame. This is on a 15-minute, and this is the currency strength indicator on NinjaTrader. And what this really highlights is several different aspects, not only of trading opportunities, but also touching on your trading persona, your characteristics, if you will. My eye as a trader is always drawn to the extremes, and the reason for that, I think, partly is that I'm happy to take on more risk because you have to try and understand your temperament and your personality and the approach, the tactical approach that is going to suit you best, what you're comfortable with. Now, you may be comfortable with everything. We trade anything and everything. We trade reversals, we trade trends, we trade all sorts. but my natural instinct, whenever I look at the CSI or indeed the currency heat map or indeed any of the other indicators, I am always looking, my eye is always drawn to what currency pair or what currency is at an extreme, looking for reversals, because in a way this is the perfect market for reversals. It is one of mean reversion. The currencies don't go to zero. The currency pairs will never go to zero. They are constantly moving from strong to weak and back again. So there's always something to trade. And when you look at the extremes, those are the points at which you're looking for a reversal opportunity. You've seen strength, and now you're starting to see a potential reversal set up. Now, the risk on those opportunities is much higher because there's no guarantee. For example, we're looking at here on the 15-minute time frame, we can see the yen, which is this one, which is very strongly overbought and is now starting to roll over. We've also got the Swiss franc, this green line up here. Excuse me. We've also got the US dollar, this red line. This is just starting to roll. Down at the other end, we've got the Aussie dollar, the blue line, and we've got the Canadian dollar, the purple line. So from a trading perspective, really spoiled for choice. We could look at pairs associated with the Aussie and the Canadian. We've got the Aussie yen, we've got the CAD yen, we've got the Aussie dollar, Canadian dollar. We could look at something with the Swiss franc to do with these two pairs, these two currencies rather. Lots and lots of different opportunities, and obviously you go and hunt these out on the charts themselves, assuming this is your chosen time horizon. The reason I mentioned your personality and your relationship to risk, if you will, is that in taking those opportunities, first of all, you're looking at a chart that has been moving strongly in one direction. And so to take a reversal takes a little bit of courage, because your emotional response in looking at that chart will be, well, actually, it's been very bearish or it's been very bullish, so I just want to continue trading in that direction because that's what I'm seeing and that's what my emotion is telling me to do. So when you're trading reversals, you do have to have a sense of courage, because there's no guarantee it will deliver. There's no guarantee when it will deliver. And in addition to that, in taking a reversal position, you also have to set your stop loss that much wider to allow for the fact that you do get a lot of congestion in these regions. For example, here, we saw a little bit of a rally, but it collapsed again, gone back down again. The Canadian is just starting to pick up. The yen, as you can see here, we got up here. We've been up here quite some time. This was 4 o'clock our time in the morning. We're now over here 9 o'clock. So we've been sat up here for 4 or 5 hours. And that's quite a long time to be sat there. If you've gone in early into that position and you've seen the yen, continue higher, maybe you've gone in over here somewhere and the yen's continued a little bit and you've been sitting in here for quite some time, you've got a wide stop, you're not entirely confident that, this is going to roll over, but at some point it will, because it has to. But you have to allow for that in your risk management of placing your positions. And that comes at a price, because your stop loss has to be set that much wider. If you were trading this on a 15-minute time frame, you might have a 20-25 pip stop. If you were trading this as an intraday trader now and looking for the trend to develop, let's say you've got the pound here rising and you've got the yen falling, so there's probably quite a nice trend developing on the 15-minute. If you were trading on the same sort of time frame, but now you're trading a pair which is trending already, your stop loss might be 7, 8, 9 pips, something like that. So everything comes at a price. And just to tie that back to your personality, and I've mentioned this in the past, but as an individual, and I always relate it back to sports, because I played a lot of cricket and I played a lot of rugby when I was younger. And whatever the situation of the game, my natural instinct was to attack, which probably frustrated, my team colleagues at the time, but that was my natural instinct. So if I was batting at 5, 6 or 7 and we were, half a dozen wickets down and not very many runs, I was not going to go in and play a defensive game. My natural instinct would be to attack. Equally, when I was playing rugby, I was full back generally, or in the three-quarters gel, a lot of full back play. And if I was back on the try line, my natural instinct again would be to attack. So that kind of tells you what my characteristics are like. I am, as an individual, I'm very calm, very laid back, don't get terribly excited, but I'm quite happy taking on risk. And it's really trying to understand that from your personality when you're trading and it's one of the aspects that we cover in huge detail in the forex program, which is really to understand your personality and to try and match that to what suits you temperamentally as a trader, because that's where you will find success. Because if you're battling your natural instincts and your natural characteristics, you will struggle. So it's a question of finding what works for you. And I guess that's why, my eye is always drawn to the extremes first, because I like to get in early. I'm happy to place more risk on the table because I want to take advantage of a trend once it's underway. But that comes at a price, because when you look at the chart, you think, well, hang on a minute. I mean, if we go and look at, let's go and have a look at the Aussie yen and the CAD yen. Let's just go to the multiple workspaces, multiple time-based. Here we are. Right, I've got the euro dollar up here, which was another opportunity, potential opportunity for a reversal. And, if I pop open the 15-minute chart here, we've had, a strong move lower, and it really just does go to the heart of it. I've seen the strong move lower. Am I comfortable taking a position when actually the market's pretty bearish, but I want to try and get in early, so to maximize any return I'm taking from that particular trade? Now, of course, the other aspect of this also is that it all comes back to time frame, because as Anna said on the daily chart for the Aussie yen, if you're in that longer term, what you're seeing intraday is potentially just a minor pause point in an otherwise longer term trend higher. But as an intraday trader, there are plenty of opportunities to trade against that longer term trend. So it all comes back the whole time to, again, this aspect of time frame, what it is you're trying to do in the various time frames. I've got the 5, 10, 15 minute across the top, and then down the bottom I've got the 30. I've got the Renko here running, which works brilliantly as a smoothing mechanism, as an entry chart for getting into these positions on an intraday basis. And then down here we've got the daily. If you look at the trend monitor, for example, what is that telling you on across this time horizon? Well, on 5, the trend is already starting. We're breaking away from the volume point of control here, which is the yellow dash line. Moving over to the 10-minute, we've seen the transition. We've gone from bright red. We've gone through the two colors of darker red and darker blue as the trend starts to develop. Now we're seeing a full-blown transition into bullish. Over on the 15, what have we got? We've got the transitional colors, but no transition through to bullish just yet. Not a flicker of change on 30. That's the Renko, and nothing as you would expect on the daily. Excuse me 1 minute. So that, in a sense, really encapsulates what it is we're doing. And then obviously what you're looking at, you're looking for all the other clues and signals across the way. Let's just pop open the 10-minute. And obviously the primary one you're starting with is VPA. The issue, and just to touch on reversals also, when you're looking at reversals or looking for reversals, to reinforce that decision making, if you will, to support your decision making, the perfect places to look for them, as well as across the time horizons using the CSI and everything else, the perfect places to look for them are as we come through the London session. And the nice thing with Ninja, it's very easy to pick it out. This is us 8 o'clock. This is Europe getting underway. This is the UK opening up here. And at these periods of crossover from one session to another, from Europe and from the Far East and Asia, which is running through here, as we come into Europe and London, naturally volume picks up, but it's also often indicative of a reversal in sentiment. And you'll see this all the time. You'll see trap moves around the London Open, coming through from Europe through to London, all sorts of things going on. But it's a great place to look for reversals, as indeed is the US session. You'll often see it when the US session gets underway. What sentiment has been driving markets in the London phase of price action is magically reversed. and it often applies to the dollar as well. The only issue we have as traders is that from a volume perspective, we do have to be cautious in terms of analyzing the volume and comparing, because we can only compare this session here in terms of like for like, because this is the London session, so we're comparing apples with apples. We're not trying to compare volume here with volume over here. You can't compare because it's a completely different session. So it's a little bit restrictive in that sense. But in terms of moving down to the 5 minute, where you've got greater range, if you will, we're now comparing from here to here. So we can see that we've got a comparative volume over a much wider spread of time. And of course, that applies to the slower time frames. You only got 2 or 3 candles to compare. So let's just have a look at, let's see what's going on in terms of the Aussie yen. I'll just flip that over. Excuse me, I'm just going to switch off again. Got a bit of a frog in my throat. Probably from getting back late last night. Okay, what have we got going on in terms of the Aussie yen? Well, similar sort of picture really. We've got 5, 10, 15 across the top, and then 30 Renko and the daily down at the bottom. This was the daily chart that Anna was showing you. Just move that out of the way. Apologies. There we go. That's the daily chart. Pretty much the same. Starting to see a little bit of transition in color there. Let's hop up to the 5, and as you can see on this time frame, we've got a transition coming through on 5 on the trend monitor. We're starting to break away from the volume point of control. The perhaps less encouraging signs moving from here, we are 8 o'clock. This is when we start the big volume spikes start coming in. We're seeing a market that's rallying, but the volume certainly through this phase is falling away a little bit. We can compare through here. So, you know, from a VPA perspective, ideally what we want to see, if this is going to continue higher, is really start to see a little bit of rising volume. Be interesting to see what this candle does, how it closes, whether it closes with a wick or not, whether it closes with a nice wide spread, whether the volume has risen to reflect a wider price action, or whether we're going to see weakness. Now, what's also interesting when we're looking at the price chart, clearly we're not just looking at the trend monitor and the volume, we're also looking at what else is going on. From a price resistance perspective, this blue dashed line, this is on NinjaTrader, this is the accumulation distribution indicator, which works on price. So we're looking at traditional price resistance and price support, purely based off the price action. And what these levels are telling you are, what these lines are telling you are basically the thicker that line, then the more pronounced is the area of support or resistance. So we've got some pretty significant levels here. And of course, just from an eyeball perspective, we've got all this price action over to the left of the chart here, which at the very least is going to impede progress. Now, that candle's now closed off. We've got a big wick to the upside, closed halfway down. A little bit of an increase in volume. It's looking a little bit weak at that point. It's also hit these areas of price resistance. So, you know, that's something we might expect. In terms of volume perspective on the volume point of control, this is the fulcrum of the market down here. This is the heaviest volume on the volume histogram, as you can see here. We're actually in a region of relatively low volume, although that everything's comparative. We've got much lower volume up here. So again, we've got a lowish volume node here, but again, we've got volume resistance as denoted with the volume point of control, and we've also got price resistance as denoted with the support and resistance here. So from a perspective of whether this trade is going to develop strongly, at the moment, it doesn't look particularly strong. It's a little bit weak, a little bit tired, and there are lots of reasons for that from the 5-minute time frame. If we move up to the 10-minute time frame, what's that telling us? Well, similar sort of picture really, because from a VPA perspective, certainly over these 3 candles, which is 30 minutes, we've had rising price action, but look at the spreads on the candles. We had a decent start to the move, then the spread narrowed, and the spread has narrowed even further on that last candle. And in addition to that, we're not seeing strong rising volume. We're seeing volume that is falling away. So we've got a rising market in falling volume, which is not a signal of strength. It's a sign of weakness. So, taking this opportunity, are we looking at it, we're thinking, well, it's not looking terribly strong. There's lots of different reasons, lots of different signals there, all suggesting that at the moment, this one is not ready for a strong reversal. Let's move up to the 15-minute. What's the 15-minute telling us? Again, similar sort of picture. We've had a big doji candle with decent volume under it here. Some buying coming in here under this candle with the wick to the lower body and decent volume. But then you look at this rally on this, we're on 15-minute here, so we've got a widespread up candle. Now, for a move of that magnitude, we should expect to see, all things being equal, more volume than that, given that we're trading in the London session. So it's all signaling all pointing to the fact that this is a potential reversal. It's not looking terribly strong right now. Now, the question you have to then ask yourself, and I guess this is what comes back to risk all the time, if you're looking at that as an opportunity, are you comfortable taking that right now, or are you happier waiting, sitting on the sidelines, and once that trend does develop, if it does indeed develop, then are you happier jumping into a trend that's already underway? And really, that's all this comes down to all the time. It's trying to, first of all, figure out what is going on in terms of the price charts. But secondly, trying to decide in your own mind what you are comfortable with taking as a risk opportunity. Let's have a look at, what was the other one? It was the CAD yen, I think, wasn't it? Let's just change that over there. Let's go and have a look at the CAD yen. Probably a similar picture. Sorry, a little bit sluggish this morning. Don't know why. Okay. That's all come up. So let's have a look at the CAD yen, see if that's maybe offering a different perspective, perhaps a little bit of a better opportunity. And let's go down to the 30. Let's just have a look at that for a bit of a different time frame. And what we're seeing here is that on 30, this is 8 o'clock again. This is London, so we're coming into London. It's now just gone 9 o'clock, so we've had these three candles here. But you can see the buying that came into the market here. Very good volume, nice deep wick to the bottom of the candle. Closed 2/3 back up the candle. Yeah, it's a down candle, but nevertheless, this is signaling some buying coming into the market. And then we see the rally attempts, and we've got a wick to the upside. Nevertheless, we've got buying coming into the market. So, it's a potential opportunity. We go and have a look up on the faster time frames. Let's see what's going on here. Let's just pull the 5-minute up. Similar-ish sort of picture. We've got the volume point of control sat here below. We're trying to break away. Again, slightly concerning that we've got this widespread up candle here, which when you look at a comparative nature of price action and volume, if you look at this candle, for example, we can compare in this sector here from 8 o'clock through to 9:15 where we are our time. If you look at the volume under this candle, just as a sort of benchmark, if you will, decent volume under that looked fine, and we've got some buying coming in under here. What's worrying about this candle is look at the volume associated with it. So we've got a wider spread on this candle against this candle, which we can call our benchmark, but actually the volume on this candle is higher than this one. It should be the other way around. We should have higher volume on this one and comparatively lower volume on this one. So this is looking a little bit weak. We see these signals, we see this rush up. There's no volatility triggered on this, so we haven't seen the volatility indicator triggered on it. But nevertheless, we've seen the price action come in. It probably moved quite quickly, but the volume associated with it doesn't look terribly strong right now. And once again, we've got a lot of price resistance overhead in these regions, getting further up the chart up to 82.20, so 12 pips away. We've got another layer here, another layer here. We've got some reasonable volume sitting in here, and we've also got some decent price action sitting over to the left of the chart. So if this market's going to rally and rally strongly, then we want to see, as always, rising volume, rising price action to support that move higher. You can also see on the trend monitor up on 10, we've just got a transition through to the darker red, nothing stronger than that right now. But if this does continue, then the areas that it's going to run into difficulty are really around here, because if it broke through there, then the volume histogram up here is very lightweight. There's very little in terms of volume and also very little in terms of price resistance as this pair climbs its way up the ladder. So if we get through, this region here is really key to holding this position. When I say longer term, I'm talking about intraday longer term. If it gets up to here and breaks through there, then that might well be a decent run to the next level. And it just brings in another aspect of trading, which is when you're looking at a position, you're constantly looking at what that position can deliver for you from the perspective of the price chart. This is not about risk and reward. This is not about 3 to 1, 4 to 1, all that nonsense. This is about looking at a price chart and trying to understand from the price chart itself, because let's face it, where else would you look for this information? This is the market telling you where all these regions are, where support is, where resistance is, where we're right to run into difficulty. So look at the price chart. In terms of this opportunity, if we get up to this level, then this is going to deliver, you know, maybe 10, 15, 20 pips up here. If that's sufficient for you, that's great. Take it. If it's not, it's the price chart telling you where the opportunities lie and the extent that they will offer a possible trading opportunity based off price resistance, price support, volume resistance, volume support, and of course VPA as well. Let's just drop that out of the way. And we've got the Renko running, which is running at 1.7. This 17 up here, this is on Ninja, but what this actually means is this is running at a 1.7 brick size. And it works in exactly the same way or very similar way to the Renko. This is Renko Optimizer, and it's the Renko on MT4, MT5, delivers the optimal setting for that particular currency pair in that particular time of the session, and it varies the whole time, and you can just select any time frame you like and it will deliver the optimal brick size. Because let's face it, how do you know what the brick size should be? Is it 1, is it 2, is it 3 pips, what is it, 1.5? That's why we develop these indicators, to deliver optimal settings exactly the same as the tick speedometer. And what the Renko does, all the indicators work, or most of the indicators work in exactly the same way. We've got the trend monitor here, we've got the trend dots. You can see here the trend dots, they transition very quickly on color because they work very close to the price action. But the trend monitor takes a more considered view. It looks at the longer term, if you will. And it's just a nice way of smoothing out the price action, helping you to either get in or to stay in once you've taken a position in the market, because it does smooth all the spiky price action out, which obviously you do need from a volume point of a volume price analysis perspective. Just go back to the CSI again. There we go. See what's going on. And really just it really just highlights the point. And the CSI is always the starting point. In fact, let's just go and have a quick look at the pound yen, because that's rising quite nicely. Pound yen or pound dollar. Let's just have a look at the pound.
There's UK news.
We have got UK news at 9:30 as well, which is in 15 minutes time. Let's just have a look at that one. GBP, JPY. There we go. Let's pop that in. See where that one's going. And again, it really makes the point that what you see on the CSI, it gives you all the information you need before you actually start. It will tell you which currencies are overbought and oversold. It will tell you which currencies are rising strongly or falling strongly, and hence which currency pairs to go and have a look at if you're a trend trader, for example. It will also tell you which currencies are not moving or which currency pairs are in consolidation. It gives you all that information on one single indicator. So it's not just about looking at extremes. It's not just searching out trends. It's also guiding you to those opportunities which are best left to one side and focusing on those that are delivering opportunities. Let's just pop this up on 5. There we go. And as you can see, completely different opportunities here. And again, it just reinforces the point I made earlier about reversals. This is London. And, you know, this is classical trap move opportunities which occur all the time. We come into London, the market suddenly falls quickly, traders are drawn in, jump into that one, thinking they're going to make some quick profits on it. Oh, it's all bad news with Brexit. The pound's bound to be sold off. Bang, what's happening? Trapped into weakness. Market instantly reverses. Up we go. 2-bar reversal. Volatility was triggered on that one. It would have been an instant signal. But moreover, the fact that we're coming through the London Open, that would have been the warning signal to just pay attention, don't jump in, wait for the market to settle, find out the true direction, and then take a position in the market. And all these guys down here will now be stopped out, regretting that decision to jump in early. And the trend monitor is now supporting the move higher. And in terms of the price action, we've had some resistance here, which the pair has broken through. We've gone through this price action over here. We've gone through these levels here. We're also now moving up into an area of light volume here. So should this move continue, now we're looking at opportunity where we should get through this pretty easily, because there's not much in the way of volume to act as resistance. So, it's an encouraging signal. Now, the only factor you've then got to bear in mind is obviously with the news that's coming up. And of course, this is very volatile. Anything can happen. Anything can be said about Brexit by any number of different people and organizations, and instant volatility arrives in the market. So if you're trading the pound, just please be aware of it. It's going to go on for months yet. It's just a fact of life. We have to live with it. But under normal conditions, if this were just a regular pair with no news, then this is looking very positive. But you've got to factor in obviously fundamental news that's coming on the horizon, or session crossovers, and all the other factors that we cover in detail in the program. So this is looking very nice. You can see the Renko here supportive. This is up on 10-minute. There we go. We've transitioned through. Look at the volume price relationships that we're seeing here. This was perhaps a little bit weak because we had a good rally. We had the doji candle here. We had a nice widespread up candle, but the volume fell away a little bit. The next candle, yeah, it's really a question, and it comes back the whole time to this issue. If you were looking at this purely as a price-based chart, you'd be looking at this and thinking, okay, where is my get-in point? What am I comfortable with? Am I comfortable getting in down here somewhere? You might not be. In which case, you might say to yourself, well, actually, do you know what? I'm going to wait for a break through this region here, because we've got a lot of price resistance there, potentially. We've also got these levels here, which are also signaling we've got price support below, but we've got price resistance above. So, I'm happy to wait. You wait for this one to develop. And now what you're looking at from this, certainly from this chart, is where am I expecting this market to struggle? And it's pretty obvious that we're trading at 141.13. If we're going to struggle, then the first point is going to be here, because we've got some extremely strong price resistance, which is inevitably will cause this market at the very least to pause. It might even cause it to reverse. In addition to that, we've got further level here, and then we get back to the volume point of control. And that is where the market has to pause at that point, because it is the fulcrum of the market. There is a lot of volume there, and beneath it, we've also got this region here. So from a trading perspective, it's a question of deciding, I'm at 141.15. I can potentially see, 10 pips up to here before we start to struggle. As an intraday scalping trader, is that enough for me? If you got in lower down, maybe you got in down here somewhere as the market was breaking away. Now you might be making a completely different decision and saying, do you know what? I've taken 15, 20 pips out of the market here. I'm going to close out, because this is going, at the very least, this is going to congest, and I don't particularly want to sit through a congestion phase. If it breaks through there, then the volume point of control is up here, and we're on up to the next level, and so on and so forth. Those are all the decisions that you have to make as a trader. Just pop that back there. Let's go and have a look at the different time frames. This is on, let's go down to 30. Again, you have the volatility, so you've got doubly reinforcing the fact that we've got volatility at the London Open. And the expectation is that at the very least, we're going to see congestion, because the volatility indicator has triggered. In other words, the price action is going to trade back inside the spread of the candle. And we may indeed see a reversal. On this candle, we get a lot of volume coming in, lots of buying in there, and then we start to see the move higher. Now, we've got a widespread up candle here. I'm not sure about the volume here. It looks okay, but not terribly high. This is really the benchmark candle, if you like, for buying and selling. It just gives you an idea of what is our expectation of volume in the session. But this is a little bit lightweight, perhaps. And again, you're looking at the chart for signals, signs, where is this market going to run to? And really just confirming what I was talking about earlier on the faster time frame chart. We've got the volume point of control here. We've got a lot of price congestion over here. We've got our heaviest volume here. Not so much in terms of price resistance acting here, and we've got some lighter volume as we move up through 14, 15 and through 20. But once we get back to 30, that is the point at which we expect the market. It may go through. There's nothing in the rule book that says it's going to stop at 30. It's going to may go to 35, may go to 40. But we expect a period of congestion to start building around the volume point of control at some point, certainly in terms of that time horizon. But from an intraday trading perspective, this again is just giving us another piece of the jigsaw puzzle. Go down onto the Renko. That's moving nicely. This is at 1.7 pips, so 17 converts. We just put a decimal point in on NinjaTrader, so that's 1.7 pip per brick size. Moving nicely. You can see here, this is a nice example of the trend monitor in conjunction with Renko, and the way the Renko, the way the trend monitor works with the trend dots. If you're going to use these two, then use them in conjunction, because the trend dots will change first, but the trend monitor will take a more considered view. So you can see here in these pause points, the trend dots have changed to red, they've gone back to blue again. All the trend monitor does, or has done on this occasion, is just transition to a darker blue. It hasn't gone to a darker red, it certainly hasn't gone to bright red. It's just reflecting the fact that you can see it comes in a little bit after. These have changed, this changes to a darker blue, then we're back to bright blue again. Same thing here. Little bit of a pause point. Pivots have triggered top and bottom, so we know we're in a congestion phase, certainly through this region. Now we're picking up again, we're back into blue again. The trend dots are back into blue also. So it's really using the indicators in conjunction with one another. And as always, down onto the daily, where are we in terms of the overall picture, if we will? Well, we're trading in a pretty narrow range. It's not a big up day, it's not a big down day. Nevertheless, there's opportunities there. And exactly the same principles. I haven't got the VPOC on here, forgive me. But again, you can see the price resistance levels up and down the chart here if we're going to move higher on this one. Trend monitor's already transitioned. This was the flash crash. And you're applying the same volume principles as always. Let's just head back. Can I pass back to you, darling? Or?
Yeah, just sorry. You turned that off?
Yeah, hold on a minute. I'm just going to pass back to Anna, and it's just before we do that, it's just a quick look at the CSI again, just to see where we are. And this is what I mean about being patient. They're here, the Aussie, the CAD, the Swiss franc maybe might be one to look at. And what's also interesting about this is that in focusing on here, you might well have missed this opportunity on the pound yen. You can see the pound is rising very strongly, which is what we were looking at. The yen is falling quite strongly as well, which is nice. This is the perfect combination, because what you're looking for all the time is those currency pairs which are being driven on both sides of the equation. You want strong buying on one and strong selling on the other. And if you've got that, then you know for a fact, without even looking at the price chart, that there is a strong trend developing. Same thing would apply, for example, on pound New Zealand. Don't even need to look at the chart. There will be a trend developing on that. Where there won't be trends developing is where the two are rising in tandem. So the euro and the pound on this time horizon, they're running pretty much in parallel with one another. Now, unless the pound buying is stronger than the euro buying, in which case there would be a differential, but not a very strong differential. So there might be a minor trend developing, but it's not going to be as strong as the pound against the yen, purely because those two currencies are rising together. So that is what you're looking for the whole time. Dollar yen, for example, both are falling together, these two, the red and the magenta. There's no trend on the 15-minute or around that sort of time horizon. It may be moving slightly if there is a differential in momentum on these two currencies, but generally speaking, it will be purely moving in a sideways direction. Of course, when the currencies flip-flop around, when they oscillate in these regions, for example, then nothing's happening, because that currency, for whatever reason, is in a pause point. Might be news, might be end of session, could be any of 26 different reasons. But what you'll see is, don't even need to look at the charts. You don't even bother looking at those pairs, unless of course you're trading a congestion strategy with options or whatever it may be. But if you're looking for trends, if you're looking for price action that's moving, then you put those to one side and you focus on those which are moving. And equally, of course, with if you were trading the Aussie CAD, for example, going absolutely nowhere, because both of them are oscillating around together. So there's no trend there. There's nothing happening at the moment. And to go back to where we came in, which is to do with reversals, it is very much to do with patience. It's putting more risk on the table, and it's understanding how your personality equates to your tactical approach. Are you more comfortable taking a position where patience is required, but you make a lot more money because you're joining the trend at the start, but the quid pro quo is you have to put more money on the table to start with, to allow for all this buffering that's going on around here, to allow for all this congestion phase? Or are you more comfortable jumping into this trend, this pound yen trend, for example, as it gets going, or as it crossovers? Is that your preferred tactical approach to market? And you have to figure out what suits you and your comfort level accordingly. Let's just have a look at the currency array, see where we are. And what the currency array will give you is, will give you all of that information, but it will give you also trend strength. It will tell you about sentiment. It will tell you which currency pairs are now setting up for potentially overbought and oversold regions. You can see down here at the moment, we've got the Aussie yen, we've got the CAD yen, which is what we expect to see, very strongly oversold. When they go to the bright red, these transitional colors here are signaling that that particular currency pair is approaching an oversold region. And when they get to these bright colors, then that is signaling that they have reached an oversold position. And equally over here, we've got the overboughts as well. Same sort of color references. But what this is also telling you, it's telling you about the sentiment towards the yen across the yen complex, because all these currency pairs are arrayed to the underside. The yen pairs are great because it's very easy to see sentiment, universal sentiment, because the pairs will be aligned all below the midpoint. And as you can see here, they are. The weakest is the Aussie yen, we've got the CAD yen, New Zealand yen. So what this is telling you is, if you're trading with a particular sentiment in a particular matrix, then you want to be trading with the universal flow. There's nothing wrong with trading against the universal flow. You will find, and you'll find this all the time, that a particular currency pair, for whatever reason, generally locally driven fundamentals or politics, whatever it may be, will drive a particular currency pair in a matrix in completely the opposite direction to the broader sentiment for that matrix. You need to understand that that's what you are doing, nothing wrong with doing it, but the risk on that trade is higher purely because you're trading against the universal flow of sentiment. I'm going to pass back to Anna at that point.
Right. While David's been looking at the reversals from really from the bottom of the heat map, the pair that I've been looking at is actually the pound Aussie. And I know we've had, I think the news, has the news already come in, David? Let's have a look. I think it probably has its employment news, but it's a really interesting pair, because again, it's at an extreme, and one of the characteristics that both David and I have is that we do like reversals from overbought states, because markets always fall faster than they rise. So when something is at an extreme at the top, you know, one thing we do know is that when it's going to fall fairly quickly. But the nice thing about the pound Aussie is this, well, lots of nice things about it, is first of all, I've actually got the timestamp here around the London Open. As you see, this with MT4, MT5, you'll have to double check, but mine is basically 2 hours out. So if it says 10 o'clock here, it's actually 8 o'clock London time. And we can see here, prior to this, we had a lot of congestion, consolidation, quite a lot of volume going in and out, but the price still very much contained. Then London came in, a surge in volume, and you know, the start of this move higher, but supported with volume. Some weakness coming in that we can see here. We know it's weakness because we've got wicks to the tops of the candle, but looking at the other time frames, because with VPA, with any kind of trading, you really can't stay on just one time frame. You have to look at multiple time frames. Now, because this is a 3-minute chart, I have a Renko, which is the version that we have for MT5 here. And what it does, it certainly picks up these little pullbacks, these little corrections, but the trends dot stay blue, the trend monitor stays blue, and what it does, it takes out all the noise, if you like, that you get on a time chart, and that noise is reflected in the wicks to the candles. But in this move higher, as well as obviously looking at the CSI, and we can see the CSI here. I just move it over back from where I placed it on my other screen here. What's interesting, this is on the 15-minute chart. These are the two pairs, the two currencies down here. The blue is the Aussie, and we've got the Canadian. And when you see them at this point, you know it is going to reverse in, you know, at some point. But we've also got something else that happens, is that markets can stay oversold and overbought an awful lot longer than we can stay solvent. And what can often happen is, we can see here with the Aussie, it actually looked as though it was going to go up, and then it can quite happily turn down as well, you know, carry on lower before it finally turns. In fact, it's the Canadian that's turned higher before the Aussie, and the New Zealand is still falling, but the pound is still being driven higher, partly maybe because of the news, who knows. But that is what the CSI is telling us. How that is reflected on this pair that we can see is at the top of the heat map is this. In this move higher that we've seen, these two little candles here, if you like, these little down candles here, and you can see the volume. The volume came in on there. You think, yep, that's really not enough to push it lower. Then you have an increase in volume, but look at the spread of the candle. We look at volume. We say, oh, look at the volume. Does it, you know, is it compatible? Is it, you know, is it reflecting what we see on the price action? We also have to look at the price action, because that is a very compressed candle. That is a lot of volume going in on, and it's a red candle, and you think, oh, well, that's a load of selling coming in. Well, actually, that is actually price support, because if that were selling, yes, that volume is saying that is red. That candle would have to be much, much lower, and in fact, it would then supported with the pivot. And this, if you like, this is what we see on the on the Renko, but there was no break in the change of the trend dot. We did get a couple of grey ones in, telling us that you know, there was possibly a slight change in sentiment, but it's been relentlessly blue ever since, and the move has carried on higher. If I just move over to the 3-minute chart here, we can see here for the first sign of genuine weakness, and we can also see rising volume, rising prices, falling volume, compression, but falling volume. They're very different here, where we had compression but rising volume. So if you like, you have price support. Here we don't seem to have price support under this candle, and even less so under this one. Then we've got a sort of a shooting star, and as I said, we will see what happens on this 3-minute chart. But we have to see this in context of our benchmark time frame. You have to compare this. We've got it on the Renko. The Renko is the first that's going to signal some significant change in direction, place, based on price. We look at the volume that's reflected on the time charts. And then I've got the 12-minute here. And what can we see here? Well, we've got high volume and we've got a wick to the top of the candle. Well, that is suggesting that, maybe this move is, coming to a significant pause point. Is it going to be enough to take from my perspective, is it time to perhaps to look for a potential entry? Because I want to hold this over days rather than just take an intraday trading opportunity. I really don't know. I'd have to look at levels and I'd have to see what else is what else is going on the slower time frames. On the daily chart, if I can expand that, there we are. The daily chart here, we can see this very strong up move, and it's gone through some very significant levels on the Camarilla. We'd have to see what this volume comes in at the end of the day. I mean, if that was the end of the day, if this was the end of the session, that would be a huge anomaly, because we've had a very big move higher, but supported very, very little activity here. So maybe this is coming to a significant reversal, but patience is all in this case. Going back to the 12-minute, let's move that to the hour, because I look at the hourly for some context. This is the move high. We've still got a few more minutes to go for this hourly candle to finish. It looks like a very big widespread candle with a volume is not, it's not terribly impressive underneath it. I'm just going to put another template on here to look at some levels. Let's have a look. Let's take it down. And what I can see here, right, let's have a look. It's gone through R3. In terms of targets of where this is going to go, if it's going to go higher, this is where I'd be looking 82.14, which is a reasonable way yet to travel, but we really do need to see some strong buying coming in to take that to that level up here. Let's move that down to 15, right? Because the levels on the Camarilla work in two different ways. On the faster time frames, up to but not including the hour, the levels are refreshed every 24 hours. So you get different levels, and how this is to your advantage is that you get to see a confluence of levels that, if they come up, if the R4 happens on the 15-minute and also very close to the hour and the weekly, you are at a very strong either a resistance level, because levels have a hierarchy. They are important to other traders in the market, both the institutions and retail traders, and we have to recognize which of those levels are significant in any particular time frame. Now, what's interesting here on the 15-minute is this level here is the R4. Most Camarilla indicators, traders only use 4 levels. We've actually introduced 6. The R4 is a breakaway through there on good volume that we can see here on the 15 is taken as a genuine breakout, and that is a good breakout from the R4, but we need to know where is it going to go next and where is it likely to stall, and it's actually stalled here at the R5, which is where we would expect a pullback. Where's it going to go back and test? Probably back down to the R4. So a really interesting look at what we're waiting for from overbought, an overbought situation with a pair that also happens to be at the top of the heat map, which could perhaps set up for me a medium-term trade, moving forward, maybe later today, maybe tomorrow, but it's one where I'm going to have to be a little bit patient, because jumping in at this phase of the price action and and what I see on the different charts is probably going to be a little bit premature, as it were. But from a long perspective, in terms of what I'm if I were long this, well, it still looks as though it wants to move higher. Now, what's interesting is when you get these big moves, which you see in Renko, and sometimes the spikes come through, we also know that there is a degree of volatility that's coming into the market. So, when you get volatility, expect a kind of snapback, as it were, in the price action that you're seeing. Is there anything you want to say to that, David? Anything to add to that? Oh? Oh, I know. Sorry, we have gone over a time today. We do apologise. So, would you want to add anything to what I said here? No?
The only thing I would say is the pound yen is now back at the VPOC at 141.40.
Right, David said the pound yen is back at the VPOC, which is where you were saying it was heading for. Anyway, right. All that remains for me is to say thank you so much for coming along today. The quantum trading indicators are here on the quantumtrading.com site. If you haven't seen it, we've actually refreshed the site. Makes it much easier to navigate and the indicators in both individually and the special deals that we do, because you can buy the indicators on an individual basis and you can click on them and you can discover not just the price, but there are, I think my internet's slowing down. Is yours okay?
Okay, no.
Sorry about that. There we are. Sorry about that. There are videos on the individual indicators that form the complete package, and you can either just buy one, or you can buy bundle, or you can buy, as I said, the complete package. And if you buy the complete package, the advantage you have is that when we develop new ones, they are automatically added to your package for free. And the education is on another site. It's quantumtradingeducation.com. Details of all the modules, as I said, reflecting what we believe traders need to know and understand to be consistently successful in this business. And finally, if you do want to ask us any questions about anything that you've seen in today, you can just email me, Anna, at annacooling.com, or David at quantumtrading.com. And for some reason, this is not moving forward. I think we're having technical gremlins again, David. Sorry about that. If you've, as I said, questions, let's have a look. That's it. Lovely. Thank you so, as I said, thanks so much for coming along. We're actually back later on this afternoon today. We're doing the day trading session. We've moved it from Thursday. Well, we'll just be looking at the indices. But whatever you're doing, have a great day's trading. And if we don't catch you this afternoon, we'll catch you next time. Take care.